today's video. Hello guys, welcome to today's video. Today's video we're gonna break down a trade that I took that was a sell while everybody else was trying to buy the market today. Today's trade I took on a very simple basis, which is basically some confluences that I teach people for free on my one-on-one meetings that just are willing to understand what kind of ICT confluences that you have to be looking in the market. So let's jump straight into the video. So today's gold opened with a very big gap to the downside, as you can see, and kept going down. But everyone, okay, this is a support, this is a fair value gap. Even the smart money concept lost money today. Yes, smart money concept, okay, so liquidity swept. Let's put our stop loss right below this low, making some rejections to whatever, and then boom, they got stopped out. Why? Because they never look at the bigger image. Okay, so in order for you to understand something, I'm gonna give out something for free, which is a minute or two for people that understand liquidity, for people that understand the market structure. Let's jump in whether to consider an order block valid or not. Okay, so this, let's say this is gonna be the move of the market today. So let's say this is a low that the market has made, okay, and the low got violated. Okay, so we call that a market structure shift. So in order for you to identify that this is an order block that is valid, okay, because guess what, this order block made a market structure shift, but in order to for an order block to be valid and to be trusted to take trades right into, it has to do some stuff, which is basically some displacement in the move. Okay, I'll show it one by one. Some displacement in the move, right back, write all this down in your notes. Some displacement in the move, and actually that market structure shift comes after the displacement, a 50% rebalance of that move, which is currently, let's say we touched the 50% rebalance and we came back to make another break of structure. So after the 50% rebalance, what do we look for? We look for a break of structure. Okay, so displacement, 50% rebalance, and a break of structure that also has some kind of displacement. Okay, now whatever the market does, we do not chase the market, we do not chase the price, we go with the flow, but until the price touches our zone. Okay, so what is the zone that we are gonna be looking for? Okay, so you see this. Okay, you're gonna mark out, the last wick, all that stuff. This is pretty simple. Okay, so let's say you marked out this as a, an, I'd say, order block. Okay, so this is gonna be the arm that you're gonna be waiting for a trade to be taken into for today. Okay, so there is some sort of liquidity, guys, that you should be aware of. One of the things is called liquidity pool, which is basically lying inside the fair value gap that being introduced in the displacement of the market structure shift or the break of structure shift. Okay, so in the break of structure, so let's say you have a fair value gap right here. So this is called a liquidity pool whenever a market tends to break structures place, okay, to push the price into a certain place. So this fair value gap is called liquidity pool. So this liquidity pool lies in the displacement of the market structure shift. So this is the 50% rebalance. Let's make our Fibonacci here. Let's mark out the 50%, because we're going to be looking to trade above the 50%, because remember what Michael said. Michael said that you should be selling above the 50 and buying below the 50, whether you're looking for a buy or looking for a sell. Okay, so this is going to be the 50% of our move. So you're gonna have some sort of liquidity lying above this high, okay, and usually in the displacement of this move there is some sort of fair value gaps. You do not want to pay attention to the fair value gaps below the 50% of the market structure shift move. You want to pay attention to the fair value gaps that is strong, which we are gonna break down in another video. What is a strong fair value gap, what is a weak fair value gap, what is a fair value gap that you should be looking for a rejection at, not a weak entry. Okay, so one of the good fair value gaps is going to be around here. Okay, so this is going to be our fair value gap. Okay, now what you're going to be looking for, you're going to be looking for a CISD being formed, and then you enter right here. Okay, so with that being said, let's jump into the trade that I have took today personally on my funded accounts. And actually, this is the trades that you guys should be filtering every day. You don't need to take a trade every day, you don't need to take a lot of trades every day, but you have to wait for the perfect setup. A plus setups that you put your stop loss, that you get amazed if the stop loss got hit. Let's jump into today's market. So okay, on the 1 hour, okay, which is going to be the move of the day, okay, what happened here? We had a market structure shift, so time made this low. Okay, so you're going to jump in the 5 minute to look for an entry. You took your time, perfect. Okay, so this was just in a no session here where Asian session started, okay, in this candle. Okay, now this is the high that Asian session has made, this is the low that Asian session has made. So we're gonna look for a shifts here and here. Now look what happens, we have a market structure shift. Okay, stick to our rules, guys. So this is the high that made this low. Okay, you don't want to take this high, you want to take this high that made what, that made the market structure shift. Okay, okay, lovely. So you're gonna put your 50%, okay, for, even though this is a very good trade, you want to look for some sort of liquidity being swept. Okay, now again, this was the inducement, okay, that made this low. So inducement means a lot of liquidity right above. Okay, so here we had swept the liquidity. Okay, fair value gap, this is a very strong fair value gap. Okay, because why, you guys don't know yet because I didn't break it down yet, but this fair value gap has a body breaking some sort of liquidity, and it's actually the body is way lower than the closure of the last fair value gap. So this is a valid fair value gap. Now with that being said, what happened here? Okay, what happened is that this fair value gap is above the 50%, is above some sort of liquidity, and actually has a great liquidity pool. Now you don't want to enter right away, you don't want to enter here, this is gonna be a bad entry. You're gonna wait for some sort of a change in state of delivery, or even open the dollar and whether see if there is an SMT or anything. And yes, there is a great SMT which is lying around these highs, these lows. You could even enter from the stop once the SMT happened. Okay, you look, the SMT is something called SMT divergence. It's basically when two pairs should be moving typically, or let's say reversely, and then they don't move together. This is called SMT divergence. Okay, that one makes the order block valid. Market structure shift touching the 50% and then going for a break of structure. Okay, so this order block is valid. So this arm, this specific arm, is the key zone for the day. Okay, now you're gonna wait for any kind of rejections either in the liquidity pool or in the order block. Okay, which happened in the fair value gap, so let's delete that. Okay, so you're gonna enter on the CISD, putting your stop loss above the high of the CISD, because if this high gets violated, guess what, price is tending to take this liquidity, or either take those liquidity, or even close this gap and then coming back your position. Okay, so this is gonna be the first take profit, which is pretty obvious, 1 to 5, guys, and let's, which is gonna be the internal liquidity of the day being produced. Okay, now last take profit for me would be this. Now with that being said, take a screenshot. Lovely, lovely. You took your notes, guys. I hope I did break down the trade very simple, and I hope you enjoyed the video. See you in the next video, guys. Alright guys, save this video for later if you wanna break down the strategy one by one again. And I hope you all already took your notes. This is all confluences that I would be willing to teach you guys in the one-on-one meetings that I will be doing in the next periods of time. I hope you guys enjoyed the video, and keep improving keep improving, keep getting better. Take your time to take your pace. Everyone has a story, everyone has a pace. Good luck, guys. See you in the next video.